Hi, it's Jonathan from Platinum Property Partners. Short video about inflation. There's a lot of talk about inflation at the moment. So looking at it in the context of, is it a good or a bad thing in relation to housing, renting, and in particular HMOs? So as with everything, there's always positives and negatives. So starting off with a few of those. Clearly, in a rising economy that inflation is occurring, you're going to see rising rents. House prices, if you already own them, they're going to be increasing. But also all of the operating costs as well. So the utility bills are going to be rising. It's going to be more expensive to refurbish houses, and potentially at some point there could be further interest rate rises to dampen the growth of inflation as well. So the upshot is it a good thing? Are your incomings greater than your outgoings in terms of if everything gets more expensive? So let's take a really simple scenario. 350 grand acquisition price, bit of money on the refurbishment and gets that revaluation, and a standard 625 quid per month per room rental charge for each of the 6 tenants within a house. The upshot of this is that you're getting about 20 grand a year operating profit and about 119 grand of your cash sunk into the house. So it's working at about 17% return. So let's say everything goes up by 5%. That's the figure that I've used. It's 5% more expensive to buy the house. It's 5% more expensive to refurbish it. However, you're also getting a 5% increase in your rents, but your running costs are 5% more as well. So all the utilities and that sort of stuff go up as well. The upshot of that is actually the house is more profitable marginally. It is slightly more expensive to buy the asset, and therefore your sunk funds are slightly higher as well. But the return on equity is actually very, very similar. In this inflationary environment, however, you benefit from 100% of the capital uplift. And if your asset's now worth 450 odd grand, you're seeing an over £21,000 of capital growth each and every year whilst that 5% inflation continues. Okay, so the underlying performance is better, but you're also on an appreciating asset as well. You might say, oh, that's all very well and good, but at some point interest rates are going to rise to curb that inflationary environment. I've set out some scenarios here, and 3, 4, 5, 6%. It will have an impact on the profitability. It's still particularly profitable at all of those metrics, and I'd warrant that other forms of investment might also come under some pressure at that point as well. Faced with these scenarios, if interest rates do start rising, you can always lock these sort of things in. There will be rent reviews, so if we see inflation causing interest rates to rise to 5.5%, that's going to be considerable pressure on the wider economy. So your ability to move rents up would be commonplace, but you're still seeing capital growth at over £20,000 a year as well. Okay, so is it a good or bad thing? Well, it's more expensive to get going, and therefore for investors there's lower competition because the barriers to entry continue to increase, and you do have a higher working capital requirement to actually get going and to put on each marginal house. There's a greater demand for the product. Shared living is a counter-cyclical product, so you find that in a recessionary environment, the demand increases, and you also benefit from the capital growth as well. So all other things being similar, it will always be more expensive and more difficult to enter the housing market in the future than it is today, if there is any sort of inflation out there at all. So the upshot of this is that if you are looking at doing housing and shared living and investing into property, the upshot is it's always better to start today than it would be tomorrow. Okay, so if you think about a very simple context, if you do this 5, 10, 15 years ago, the growth levels that you would have seen, not only from the income, but also from the capital growth of the houses, is always significant. Is there going to be a massive housing crash? Very unlikely. We'll do a podcast to cover that in the future. But hopefully that's been a quick overview about why inflation is here. It's here to stay. Some inflation is good, and actually if you're already in, you can actually use it to your advantage as well. Thank you very much.